Welcome to the Real Estate 401k Show. Here are your hosts, Ryan Gerdes, Mike Weinstein, and Justin Frederick, helping you build a legacy of wealth through real estate. Powered by the Recon Group at West USA and the Frederick team with Fairway Mortgage. NMLS number 625918.
What a difference a rate makes. We always talk about interest rates. That's what's on everybody's mind. We never know what the Feds are going to do tomorrow, and whatever the case is. And one of our philosophies here at the Recon Group and on this show, the Real Estate 401k Show, is the interest rate is just one of the many numbers that you have to factor in. But let's talk about the elephant in the room. Rates are high right now. They're still lower than what my first interest rate was when I bought my very first home in 1998, but that's neither here nor there. And so we talk about, the strategy of buy now, take advantage of seller concessions, take advantage of being able to negotiate a good deal on the price, possibly pick up the furniture, take the high interest rate, and then in 12 months, which we're expecting rates to be down into the mid fours to mid fives. And so under my example, I'm going to go with mid five. Okay, I think it's a very realistic possibility that a year from today, that will be in the mid fives, and helping everybody understand like the difference on what these two rates make. So if you jump into the game, you take advantage now. So I, as an example, because this is for one of our investors, he's looking at a $500,000 house. Okay, he is going to be putting 25% down, and even as an investor, it's mind-boggling. This is the thing where rates are killing us right now. With 25% down, we are still having a hard time finding him an investment property that will produce a positive cash flow. So I factor in $50 for HOA, about $15, for the area that he's looking, approximately $1,500 a year for taxes. So he right now, because it is an investment product, his rate is 7.875%. So taking into factor all of those numbers and putting 25% down, his mortgage payment is going to be about $3,002. The properties in that area will easily rent for $2,800 to $2,900, but that's a negative cash flow, and sometimes, Ryan, it's a hard pill to swallow.
What's the negative on that?
About $200.
About $200. Okay.
So $2,400 for the year. Now, if our predictions are correct, and I'm not going to say our predictions, if what the economists are saying is correct, and we wake up 12 to 14 months from now with rates at 5.5%, his payment, Ryan, is going to drop from $3,002 to $2,413. Now he's going to have the better deal on the home. He's going to have seller concessions, and now he's in a positive cash flow situation.
Right, and so it'll take him 2 years or 6 months to recapture what he lost in 1 year. Yeah. So here's the thing that always baffles me, and I've talked about it before. People are happy to go throw $1,000 a month into a 401k or a pension that's maybe earning them 2 points a year, if that, and that's cash on cash, right? So that his 25% down is $100,000, right? And then he's got 20 or
it's 125,000.
Yeah. Okay, sorry. So and his payment's $3,000. He's basically coming out of pocket $200 a month, and that's if it's 100% occupancy. And so it's $2,400 a year, and he's making probably, so right now this is kind of a bearish year. There's probably only going to be about a 4 or 5% increase, in the next fiscal year of actual values. Yeah. But that's based off of $500,000, not off of $125,000. So, I mean, I'm not trying to get too crazy with all the math here, but it doesn't take a math genius to figure out, my appreciation over the $500,000 is going to far outweigh the $2,400 that I'm gonna be coming out of pocket with or lose. So why the heck are people so gun shy about a scenario like this when they're happily throwing $500, $1,000 a month into a pension 401k that's doing 1 or 2 points a year?
Well, I'll answer the question. The reason that they're gun shy is because They don't understand the numbers. They don't understand the market because nobody's there like we are as a team of real estate wealth managers. There's no one there to really explain all the different ways that you make money on a piece of property and understand this process. And in addition, I'm not gonna lie, it's been a very, very long time that I was considering scenarios where I might have a negative cash flow because interest rates were so darn low. And that's the point, Justin. Rates will get back down there. It's going to look different.
Well, and I think people still haven't quite swallowed the pill about, 3 years ago, you could buy an investment property with 20% down in cash flow all day, no matter where you were buying. So it's just especially for the new investors that are coming in the market. I don't know if this individual you're speaking about has ever gotten into investments, but Ryan makes a great point there. We have to tell people, with the demand being where it's at and the supply being so low, you're going to make money on appreciation no matter what the market looks like right now. And as soon as that market starts picking back up, you're going to see more appreciation happen with that property very quickly. Mm-hmm. And you'll be able to recoup that cost very quickly.
Safe to say, and I'll let either of you jump in, if we wake up 12 months from now, rates are now at 5.5%, and let's say home prices have stayed steady, safe assumption that property is going to positive cash flow for you.
Yeah.
We're just getting hit right now because of the current rates.
I actually think for savvy investors, this is the time that they're all licking their chops.
And bro, you said something last week, and it stuck with me, and I know it, but it's a tax write-off. Taking a loss on a property is not necessarily the end, and it depends on where the individual is at in the tax brackets and their source of income and so forth. But for me, if I've got a property over the next 12 months that I'm, losing $200 a month, I'm not going to lie. I think it's going to help me. It's not a loss in the sense of tax benefits.
And someone on our team, Mia Romaine, she brought up a statistic that I was kind of like floored by. At the height of inflation, what was that? What was the top number?
9.1.
9.1. They were basically doing the breakdown on a federal level that basically every dollar that you have in your savings account is losing about a nickel a month. And that's just because that's how much everything was just increasing in price. And so, we've talked about it earlier on in the week as far as like what to say, save your money. Like, okay, yeah, definitely save if you're on the fence. If this is just not the market for you, this is just too crazy for you. Not only do you need to save more because you're going to be spending more, but you need to save more because your dollar is going to be worth way less. So, case in point, just the price of homes or the price of gas or the price of grocery, all these things are going to be eating into your household budget.
All right, if you're looking for strategies on how to create a real estate portfolio and that legacy of wealth through real estate. And I'd also say if you don't own a home and you're looking to buy your first home, you probably can't find a better team to do it with, because whether it's your first home, your fifth home, your 10th home, our goal is to turn you into an investor and help you build wealth in real estate. If you'd like to have that conversation, I invite you to reach out to us. All you got to do is text the word wealth to 623-AZ-RECON. Again, text the word wealth to 623-AZ-RECON. I think, guys, too, it's several things. It's the naysayers whispering in your ears, and it's emotions. I just have people that are so emotional. I will not buy a house if rates are at this. I will not buy a house if this happens. I will not buy a house if I'm going to, if I'm not going to have positive cash flow, $400 a month or not. And I think it's emotional, and I think it's being very, very narrow focused. The moment that you remove the veil or the scales from your eyes, whatever you want to call it, and you understand all the different ways you make money in real estate, and you understand how investment works or how money works, and you understand how all of these other people that are frickin' millionaires and billionaires and made their fortune in real estate, you understand how they view things, because you just can't take a look at that single property, that single situation, that single scenario, because there's so many things that go into it that are in your favor.
I think that people just need to look at the whole picture, just like you were saying, but understand that in a market where rates are high and inflation is high, things do get lean. You're not going to make as much money, but just like we're saying, as time goes on and these rates drop down, there's opportunities are going to be there. And if you already have everything set in place and you're getting your money, one, with your seller concessions, two, with a value that's or with a purchase price that's lower than value, and three, you're already having your property put in place and rented. Once the rates drop and you're able to refinance it, you're immediately making that cash. And you already made the cash on not paying for your closing costs or a portion of your closing costs and the lower value.
Ryan, tell me where my math is wrong. So I buy this $500,000 property, okay? Let's say my numbers are off. Let's say it's $300 a month negative cash flow. So no math major, but that's going to be $3,600, right? Mm-hmm. We are expecting property values to appreciate over the next 12 months by 5%. So 5% of, again, no math major, 5% of $500,000 is $25,000. Mm-hmm. Okay, so if you're fixated on the loss, you walk away from the gain. And I will right now, I'll give you cash. I'll give you $3,600 right now in cash if at the end of 12 months you're going to give me $25,000.
Well, you're jumping over dollars to pick up pennies. and that's really what, and so here's where the math is wrong, because you're asking me where it's wrong. What's wrong is that people hear the word $500,000, and $500,000 is a big number to a lot of people. And so they're hearing, man, I need to invest $500,000 in order to amass this kind of wealth. And so it immediately is just putting them on the defense. And so I get it, right? If I'm walking down the street and I see a nickel on the ground, like, I'm probably going to walk right past it. But if I see $500,000 on the ground, I mean, I might prison yard shank you, and to get you out of the way to go pick it up.
I'm Jewish. I stopped for the nickel.
But you get where I'm going with this. People hear this big number, and so immediately they say that's out of my ballpark. I'm not even going to go there.
That's a great point, man.
Right? And so if they can go pick up a penny stock, for 15 cents a share or whatever, then all right, yeah, let's go gamble, right? But they're not looking at the big picture. They're looking at the 500,000. They're not looking at what is actually going to happen if they say, "Oh no, okay, I have $125,000 sitting in the bank. It's doing nothing for me. If anything, it's losing due to inflation." Right? So put that over into a house. Man, gosh, I'm losing $3,600 a year. But if you take that 5 cents a month per dollar, or 5% a month off your 125, that should even bring it into more perspective.
Well, yeah, and then it's an interesting point, because we are fixated on the purchase price. The number that you got to be, the first number you got to be fixated on, in my opinion, is how much out-of-pocket cash. So because I'm no math major, I need like really simple numbers. So let's take a $400,000 house, and as an investor, I'm putting 25% down, right? So my investment now is $100,000. Okay, that's the number that I'm fixated on. Obviously, if I am a primary resident, I'm going to put 5% down. Now it's only $20,000. So because I know $100,000 can intimidate people, but let's just say it's $100,000, right? And that home goes up as predicted 5% next year. Okay, that's what, 20,000. That's a 20% ROI, rate of return, on your cash investment.
And I think that again, people get excited about that type of uptick. They just get really taken aback by the fact that there's a $500,000 upfront investment, even though they're only coming up with 25% of it. So I think that we do well in repeating that, because the folks out there that aren't picking up the phone, that aren't reaching out, or are just staying hidden,
or the trollers, we know you. We read your
we
stuff.
love you.
I want to bring them on sometime.
Oh
Yeah.
my
That'd
God,
be
dude, I would
fun.
love it. Text the word troller to 623 AZ Recon.
We'd love to hear from you. We'll bring you on in Zoom or something like that, or you can come in studio.
We'd love to help you build that real estate wealth strategy. It's what we specialize here, what we specialize doing here in the Recon Group and on the show, the Real Estate 401k Show. It's all about helping you build wealth in real estate and understanding how you do that. And if you'd like some more information and talk to one of our real estate wealth managers, go ahead and text the word wealth to 623 AZ Recon. Again, text the word wealth to 623 AZ Recon.
Thank you for joining us on the Real Estate 401k Show. If you want more information on how to build wealth, click on the link or text us at 623-297-3266. That's 623 AZ Recon.